Everything in this video is for general information and educational purposes only. Nothing presented constitutes financial product advice, personal advice, or a recommendation to acquire or deal in any financial products. Any examples are illustrative only and should not be relied upon as indicators of future performance, as past performance is not a reliable indicator of future performance.
Hello, Trader Romps here. I thought I'd run us through a quick market update. So let's get into that. So we're going to start off just with the normal LTVW here. You should be pretty familiar with this by now. If not, you can go over my channel. I've got some videos up on how it works, the option market theory rules and that sort of thing. Starting up this top left-hand corner, we have a daily chart. We have a yearly developing yearly VWAP. We also have some rolling VWAPs turned on at the moment. So what we want to look at is we have this clean inside break here at the moment, which can kick off a law too, with the destination down towards the 89,600 area. But there is also a chance that we could hold around the developing yearly VWAP and then push back up, ideally not rejecting at this point through here and pushing higher. But that does open up for a much larger retest of the developing yearly value area high and potentially moving to higher prices. Now, what we want to pay attention to is sort of doing the rounds at the moment on social media is the 365-day rolling VWAP. So it's going off the last 365 days and it's rolling along. And if we do look at this VWAP, we can actually see how we put these lows in with a couple of little closes and quick reclaims before. So it has been holding throughout this area down through here, for quite a bit of time now. So we want to see ideally price not drop below that level, which is a bit of a line in the sand, which is confluent with the developing yearly VWAP, which we're currently at. However, things aren't looking great at the moment, but we are still with inside this area that could, basically make a bit of a range, put a little bit of a spring if we did sweep below it, or we could put a bit of a higher low in, and hopefully we can clean up some of this mess above. We are at a daily order block at the moment, but we do have a bearish order block. So just looking at these two, that's those highlighted candles, it sort of does open up for a little bit more potential chop in between this range moving forward. But we'll continue moving through the charts and see what else we can break up and analyze out of this. So basically what we are is we're rotational within the developing yearly. We're in the upper quadrant of the two quadrants, in the premium area. And ideally, we don't really want to see any closes below these lows, especially daily or 12-hour closes. We can look back down here. We can see that we did get a close and a quick reclaim. So something like that, a morning star reversal, something under the level would be okay. But once we start getting closes down here, it's looking pretty grim, and it looks like we would be heading down towards that 89.6 K area, just going basically off this indicator alone. Moving over to a 12-hour chart, we've got the developing yearly, which we're in balance down on at the moment. So we really want to see a reclaim and an actual retest of that 105K area. And you can see that we obviously had that rejection point that's come in. We've got some TPO levels that made it a little bit more easy to see. But if you weren't using that, we essentially had this quarter two. So we're this developing band over on this side over here that was moving through and it closed off. This gave us this price actions quarter two value area shot out to the side, and we can pretty much see from there that we had a rejection recently trying to reclaim that quarter two. So we can see the quarter before, the most recent previous quarter was this level through here, and that's how we had this price action through here, fail above, retest, and then push below. So at the moment, the concern is we're getting a retest off of this level here, which obviously could tell us that we're going lower down towards the quarter two VWAP around 96K. I believe there's some a bit of a golden pocket down around this region as well. So this would open up the idea if we had a higher time frame close down here, putting in a morning star reversal or something back in this area here could make a great bear trap to push prices up. But that is sort of clinging onto a little bit of hopium when we do look at it in that way. But we are in balance down. We have rejected the quarter two. And when we reject the quarter two, well, unfortunately, just like we said with the yearly, is with this type of rejection, if we do lose these lows, we are definitely looking towards this VWAP, the quarter one's VWAP, so this area through here. As I mentioned, there's a bit of a golden pocket through here. It makes sense. But then we could be looking down towards this sort of 86K area where these two quarterly vows come in. But of course, when we get a rejection up through an area like this, then, the law does state that we probably are going to be rotating to the other side unless we have strong reactions at all VWAPs and that sort of thing. So that's sort of the hopium side of things. but how it's looking at the moment, it's not looking good unless we can get some sort of compression. I'll clean this chart up. If we can get some sort of compression through this area up through here, with inside this area, we do just chop around in here, we might actually get a retest of the area and push up from there. But that's, again, just a bit of hopium, just a little bit of what I'm looking at. It's just a hypothetical, not really a prediction. So moving down to the monthly, this sort of, what we can see here is we're actually rotational within the developing monthly. So this current monthly, this band that comes down through here, we're actually, we're balanced with it. So that basically just means we just need to expect that we're going to be rotating from one side to the other, to the other, to the other, wherever it is at the time. And we need to just treat it that way while we're rotational because it's all we know. And so while we're within these bounds, we have these poor lows down through here on the lower time frame. It's a lot clearer. And we also have this CS9 candle down through here. So this opens up a few things here. If we were to come down and actually get a sweep out of this order block down through here, which we can just put on at the moment, I might have some more T up pop up, could be a bit messy, but if we put this on down through here, we can see, we'll put this on to blue, make it a bit clearer. We can see we came down here, we've got the developing monthly value area low from this point here. We've got an old range as well, deep premium up through here. And so there is a chance that this could also put a bit of a Morningstar reversal pattern in. That would also open up to the idea of what we said before, which was the chance that, down through here we could get some sort of ascending triangle pattern sort of happening through here, as the compression hypothetical. So it's not all loss. It's not looking great. I've got some TR up at the moment. This is a bit of an old range in through here, which lines up the developing monthly VWAP. So a lot of these indicators line up even if you're not doing any naked price action. But we do have sort of this order block through here. We also have this 9 up through here, which got fairly mitigated with this price action. But now we've got this fresh order block up through here. It's sort of just looking at the point at the moment and this order block down through here that we could be in for a little bit more chop while it decides what it actually wants to do. But of course, we're rotational on the monthly at the moment, so we can't be calling for new lows, we can't be calling for new highs until we actually see some sort of break out of this area while we're in this developing monthly. And obviously as well with this developing monthly, well, we are in balance down on the quarterly. So of course, this would be confluent with breaking up out of this area, and ideally then would be wanting to go for the previous month's value area low. So you could call it 109,320 with this order block through here. You'd want to actually get acceptance with inside this area, so we could rotate back up towards the more healthy prices up around that 114K area. So for now, rotation on the developing monthly, and then we can just drop down even a lower time frame at the moment and have a little bit of a look. So we have actually at the moment had somewhat of a small micro retest, but this could be, as we said, we know there's these order blocks and that's high time frame order blocks up here. So we did get a bit of a reclaim. We could push up, and this would introduce that chop where then we could come down afterwards and clean out these poor lows. What I don't love is the low is actually built on these relatively equal lows, but realistically, it is still, from here, it is still a high low. So, back in April, we also had a really, really poor low and it sustained us all the way to all-time highs. So just because it's like this doesn't necessarily mean it's going to go. It just is a little bit weaker because the liquidity is so close together. It can be quite appealing for people to go down and take out all of that liquidity below. But this area up through here, still within sight of the previous week that we're rotational within at the moment. This here is more likely probably going to go if we are to stay rotational within the now previous week value area from here. Okay, so that's pretty much the LTVW and what we're getting a bit of an idea. Obviously a bit of a chop fest. We are around a bit of a diddle in the middle area. The line in the sand obviously is that 360-day rolling VWAP. I would say the quarter two, we're going to go off this, would be the bearish line in the sand. So obviously we want to see a reclaim above there to get back in amongst all of this price action up through here. So you can see how, if I just open this up again, you can basically see how when it's getting this respect through this area through here, this time and space, from there, what we want to see is we want to get back within inside of that area there as the step one, essentially. Why step one? Because we still actually have this previous quarter up here where it gets like it's this area up through here, which is what we really want to be with inside. But the first step would be just to get back and be rotational within this area as we failed up through here at the time. So if we can work our way to get back inside of this area up through here, put in a bit of price action, finally reclaim up at the time it would be above the developing VWAP, we would be working in that higher quarter of where the previous quarter VWAP is, and you know, a lot of that action that could take us back up to the all-time highs. But for now, we need to just work with what we have. We have just had a pretty nasty rejection off that quarter two. So at the moment, it definitely needs to sort itself out with some more price action. We need to see some bull step in, that sort of thing. But I'm not calling the low at the moment, but I'm neutrally bearish. So I actually have another chart, a lot more a more simple chart, which is this one here. It's a little bit cleaner. It's a little bit more based on price action. I know from what we just went through what the LTVW is doing. I've got the other chart up. I generally can glance over it at all times and have a look at it. But what I've done here is this is just more of a naked price action with a few little levels. I could add a million levels on this, but I'm keeping it fairly simple. And so what that is at the moment is I've actually just gone from the all-time high, and I've just done a complete drawdown for a range to see where we're in. We can see the health of the bulls and the bears. What we can tell is basically after Binance Oracle, you know, went crazy, or insider trading, whatever you want to think it was, a bit of manipulation to push the market down. Since then, we did not get a V-shaped strong recovery. What did we get? Well, we got off the PD rules, of course, which are for those who need a bit of a recap. What that means is this is the deep premium section. You can't buy here. This is the premium section, not ideal for buying. Discount, okay for buying, but not ideal. Deep discount's the best area, obviously, because the invalidations go below really easy. But at the moment, what we can see is if we actually go off the history of what price did after it dropped that out of that area, and then when we finally got to this point through here, this is the part that matters, obviously, because this range didn't exist until this low went in down through here. We can see that we came up and pretty much found a lot of supply straight back with inside the premium. So because of that, it fell down. We didn't even have any strength to come back up to this area, which could have came in and sustained a better sort of high low to change the direction. But instead, we basically just ended up in this bracketing environment down through this area through here, which is in itself saying, hey, no one's really wanting to buy these premium prices. Therefore, we probably need to go a bit lower and cool off. And obviously, that's what we've gone ahead and we've actually done. So I'll put this range in through here. And this also is not just a normal range. If we jump out to the monthly quickly, and you can see where it's been pulled from, it's actually been pulled from previous months. So instead of it just being a random high and low pivot, it's actually the entire month before's range. So obviously what we want to see in 18 days time is we would like to see us close back above that range. So I'm kind of giving a time frame of 18 days and 23 minutes before we sort of get this bit of a local break of structure and things start looking really, really grim from there. So we've still got a good part of the month to actually be able to do its compression, sort itself out down in that area, down through there. So we'll just jump back to a time frame like the 4-hour again to work off. We can see a little bit more clear. 365-day rolling VWAP is actually our bullish line in the sand. We're not looking good if we are getting the higher time frame closes. Having said that, we know that there's a little bit of lenience. This in itself is a deviation, and obviously when we see these things, we can generally come back into a range like we sort of don't have the opportunity. You call this a mini bear trap off this sort of triangle price action. We pop back into here, come up and get a bit of a reclaim. It could look okay again, but at the moment, this was my neutral bullish. This was not let's all go, because I needed to see the bearish line in the sand. Now with TPO, it's a 3-week composite value area low, which was more accurate to reject off. But we also just went over the VWAPs, and we saw that was also quarter two's value area high. So obviously that whole area there, where sort of all this chop and stuff takes place between the previous quarter, is ideally where we wanted to get back into. We have had a rejection. We've got the time and space at the moment, and we actually are back underneath. Then we had a daily close back under that monthly inside bar range. So again, not looking great at the moment. We've got the pull lows down through here. We are coming back into this triangle. I'm not a pattern trader, but nonetheless, when it's super clean, it's super obvious. We can see that we're going to have a point now where pattern traders will potentially through here try to push it back up on a lower time frame. This area here would just be this area through here. fractalized onto a lower time frame, if that makes sense. So I'm looking to see what they can do, but I'm just going to say rejecting really hard with this failed auction off through here. One more thing I wanted to talk about again was a similar way you could look at this on the LTBW if you want to say that was a failed auction. So again, we sort of failed to have an auction above the 3 week on lower time frame. It didn't last that long, but more of a failed auction was we really probably wanted to see us grab in and hold on to this developing quarterly value area low. Okay, so how I would have drawn that through there was I would have put this order block as the range through here, where that nasty rejection, which was no hope. But from here, what I would have wanted to see was a wick back up into here to say, hey, we can keep trying to get in here and actually hopefully move up. But we didn't. We got the close below that. Now that we have the close below that, we've got the daily close below the monthly. I'm now sort of looking at the fact that this is a little bit of an AMD on the lower time frame. So what does that mean? That basically means if we go to a lower time frame at the moment, we are under the previous weekly VWAP. We could have something where it's a bit of a wick city. We're a bit choppy around the VWAP. We could move up just to basically trap a bunch of bulls, and then we continue to roll over to go towards the previous weekly value area low and towards these equal lows. So that's just a bit of a hypothetical at the moment. But around this area, it's a bit of a chop fest. We have deviated away fairly far from the developing weekly value area low. So we could move sideways to wait for that to catch up. The bears are strong enough to keep it down. Otherwise, it could just be a little bit of a push back up in this FEG, or we can have a little bit of a look at other price action, that sort of thing. But the main thing is we did lose that low through there at the moment. And we've obviously lost, we've had a failed auction of that developing quarterly value area low. So because of that, I'm pretty much just at the moment gone back to being neutrally bearish. So when I say neutral, it doesn't necessarily mean I will still scout these areas. But at the moment, while we're back under here, I am leaning more towards bearish because that's my system. It makes me that way. When we get back down to this bullish line in the sand, I did mention on the monthly, we have this 9 down through here. So again, it could be a place for bidding just basically because it's mechanical. I have a really, really close place to be incorrect on. So it's not a huge stop. It allows me to size up. That sort of thing. And it does open up the idea that, this could be yet again just more games, more deviations, more ways to sort of essentially trick the pattern traders, that sort of thing. They'll bid here, they'll get caught, they'll get stopped out below these lows. We tap into this, then we take off, and they're annoyed that once again we're back up inside this neutral bullish area. But the lines in the sand are pretty clear. This 3 week or the quarter 2 value area high, we want to see price above that. We can then classify this as a failed auction to the downside if we do get to that area. But at the moment, you could, the idea was like, obviously this should be the deviation through here. This here should have been the spring, and we should have pushed back up from here. Could we still push out from here? Yes, we could, but does it look good price action wise, volume wise? Not really. It's not looking as strong as I'd like to see. So I'm happy to basically just sit here, be neutral at the moment, and let the market actually show me what it wants to do. I'll scalp around on the inside of this. So I'll take some wins, I'll take some losses for a bit of fun, just to scratch the itch. But for the more serious trades, obviously, if something comes down and reclaims this area up through here, I'll be looking pretty solid to become a bidder again, with hopes that we definitely get through step 1, become rotational with inside of this area through here, and then break the level required for the upside of trend step 2. So that's basically getting into premium. Once we get up in here, it's looking really good that we've basically made this whole area now a step of support. We've actually shown that we've got the deviation below the low, and then bulls can start to get more in control where the bears start to freak out because we're back in the highs. And obviously then we get everyone who buys high and sells low. We start getting people being more convinced, probably where they shouldn't be convinced. So obviously risk exists, in places where, people are generally bearish. But if you can find opportunity, you can read the markets, the market shows its hand, you can get a way better position. And by the time we're up here where everyone's buying, you're in a safe place to have a stop loss, well in profit, and everybody else up through here can get caught offside if it does decide to roll from that point there. But step 1, let's get above this 3-week CVAL. That is the bearish line in the sand. Let's hopefully sustain this bullish line in the sand. I'm not going to become a bidder if I just see, like Morningstar reactions and that sort of thing down here. I would definitely like to see a reclaim of this, because again, there's nothing saying that we actually can't come down, put in some nice looking price action through here, just come up and retest the backside of this, and then continue lower again. So from there, I could have a scalp or something that may leave a bit on to go up there, but I would not be going heavy this area. I really want to see that reclaim of that area again with the correct price action, that sort of thing. Then obviously I need to be wary at this point, wary at this point, and then once we're above here, for rotation, we can breathe a little bit more again for um, potentially higher targets and even head towards all-time high. Just looking at the TPO at the moment, we want to go through that quickly. Bit of a mess at the moment, but on the monthly, we can pretty much see that we've got 3 months of value above, which we didn't reach back up into, so not the most bullish situation going on there. We've got these 2 month composite through here, didn't reach to the high of that either. And at the moment, we're having this chop fest, which is basically where there's an overlap that's actually happening of this 4-3. It depends however you want to look at it. Composite value area high, which has this point of control. So that's why I got the 4 month value area high. We've got a weekly composite NPOC. This NPOC from back, this was a point of control. Wasn't NPOC, just a point of control now. We can also see this point of control through here. So it's a quick and simple way that you can line up a really important area on the chart. And that's what we pushed. We've tried to reclaim, and we've actually put a failed auction in above that. Where are we bouncing at the moment? We're pretty much bouncing off this 2 month composite value area low. So that's, of course, where responsive bidders are stepping in. That's why we're getting a little bit of buying directly off this point at the moment. Now, these are more zones because the tick size that I've got sort of isn't really tradable for accuracy. It's more just sort of locations of area. But if we were just to drop down into the weekly from there and have a little bit of a look at what's happening through here at the moment. So we've got this composite, quite a large composite from way back. There's a few different ways to draw this one in. But it pretty much, the main thing is it's quite confluent with this 2 week composite. So you can pretty much see this area up here is going to be is the area that I would like to I would actually like to see. So it's around 109k. Really feel more comfortable above that area. But the first step was basically just getting in on this 3 week composite value area low. These three candles through here combined, their value area low came straight across, which was also confluent with the Q2 value area high. We had a big sell tail go in and reject off that. And we have been pushed straight back down with inside of the previous week, which is not ideal. I would have liked to see some bidding come in, which is the larger composite value area low. And obviously a bit of a high volume node where buyers were stepping in to get back inside of that. They failed to sustain. So at the moment, we've got the high time frame close. We've lost that little range that I was talking about on the 4 hour. And so at the moment, it's not looking too good. Why? Because we have basically become re-rotational back with inside this with this poor low. So normally poor lows, a bit of a way to look at those, a quick bit of alpha is a poor low isn't necessarily generally always going to get swept. So those who understand these things on a candlestick chart, they will look like this. So basically it's just saying that there's wicks are really close to each other, or there's a whole area that's really close. Generally, what that means is more stop losses, right? So that's why they're quite a draw on liquidity for a price to go and put a buy tail or something like that in, leave people offside. In one hand, it's saying a lot of people are on side, but in the other hand, it's saying when price was there was actually a lot of limit orders. Okay, so even though people are freaking out, capitulating, selling their bags, there was a lot of limit orders that were able to sustain without having a big dart below. So obviously with that, generally it can be quite a bullish thing. If you go back through, if it's loaded, we'll probably find in the past where we have left not a buy tail here, poor low here. And that's what you want to see though. You don't want to see us come back in. You want to see it continually move away from it, which is basically keeping people out of the market. And it was probably just the hand of a large whale or whales who actually held those pulls. So in one hand, it can be bullish when you see it moves away quite quickly. But in the other hand, when we do start to move back towards it, we need to start being a little bit more cautionary. So we've got the sell tail, large amount of sellers, lots of people are caught offside up there. The reverse down here, we're going to have a lot of people, start to think to themselves, shit, is my position actually safe? Which can also, make people more hesitant to start bidding through this area. So we have the naked point of control, the naked value area low, obviously, because we've just entered reback inside of it. And again, these same rules apply. So we'll pretty much just be looking for, around this time point of control, which is the red one and the blue one, this sort of whole cluster, around this 100 and, 106.50 to 102K. That area there is probably also having cross-check, but it's probably where the order block exists that we're talking about, where we could get a little bit of noise. Of course, we can always get something where we come down and retest the level before we actually move to the other side of value and go and clean up things lower. So that opens up for the possibility of chop. We have this older several week value area low through here, so that can interrupt this if there is a large amount of supply, which tells you there's a higher chance of moving lower. So generally, if I see something move higher through a level, it's saying, hey, people are still buying here. They still exist in this area. But because we essentially at the moment have gone back inside this, we are what are we? We're rotational. Okay, so we just need to expect that we're rotational with inside of this area until we're no longer, and we need to understand that there are the pull lows below, which we can see on the daily and on the candles. So there is a draw on liquidity probably around these points of control. We can see we expand this one out. Here's where your pull lows sit with a large amount of buyers down here. So obviously these buyers in here had limit orders to defend it. So we could go down and we could stop them out if they move to break even. So a bit of liquidity for people to push back up from. But again, at the same time, with this pull low and being rotational again, being cautious that we are moving back into a neutral bearish stand point on the actual market and how it's currently representing. So that's pretty much where we are with the weekly. We've kicked off that 3-week vow. We've moved outside of the composite. So at the moment, we are looking at, we come and retest this area and push below. We can confirm the fact that from there, we would have a failed auction that has gone back into that multi-week composite. And obviously a clean rejection off the 3 weeks. So it's still showing a lot of sell pressure is coming into the market. So just to quickly go and finish up, we just have a look at a daily through here. We've got a 5, I believe, 1, 2, 3, 4, 5. So we've got this 5-day composite. And moving off from the side over here, we had this 2-day composite through here. We've come back up. We've gone all the way to the other side of it. Basically, naked point of control, the 3-week, which I've also highlighted on here of importance, which was confluent with the value area high of the 2 today. So, this is confluence, adding extra levels on top of levels. And we can pretty much see that we had a close with inside it, therefore we should have been rotational. And we moved very quickly to the other side. And this is what I was saying. I would have liked to see in here hold and remain rotational at least within this 2-day, so we can have some lower time frame compression back up into this level. But no, we haven't. We've essentially at this point here, and I will call it because we're back inside of the old profile. So we've had the failed auction with inside the 2-day. We've moved straight away. I put this in the Discord yesterday. We'll move straight into this area through here. We do lose the area. We even had some of this choppy, bit of a bear flag, choppy back test of it. We've pushed down through now. And so now we're pretty much looking, if I just close this one off and we open this one to expand it. So we've opened below. We've opened below, large. This is where we're talking 51 million. So buy clusters, people were trying to buy it. They're trying to actually hold on to the high of this. So we could have at least been rotational with inside the two composites. But for now, we've broken back with inside it. So we need to expect while we're with inside here that we are rotational. Okay. So while we're rotational, retest back up in this area or whatever, this thin spot up through here, basically, would put, that clear inside break with time and space, and then rotation back to the opposite side of value from there. Naked point of control, which would be a bit of a draw on liquidity. Got the CS9 candle and that sort of thing down through this area as well. So again, that could be a last stand if we do get responsive buyers stepping in, and these same people down here who put the poor low in, these relatively equal lows, which is a poor low where all the limits were holding, a bit of a buy tail of excess down through there, volume point of control through here. We could then go cross check, with the CS9. I don't want to take up too much time. That's something I'll be doing. And we do come back down through here. This is where we could get that sort of a bounce out of that CS9 area, reclaim, and it doesn't mean it's over, but we just know that we then have a higher chance of moving back up to this 103.6k area. And then from there, we'll see what happens, whether we remain rotational, put a higher low in here, or we actually continue up higher, hunt out this naked point of control, and then come down and get a retest in here and then push up. So I don't, and no one knows exactly what's going to happen. Maybe some big players have got a good idea because they're the ones who are going to actually move the market to the direction they want. They're successful, then they're actually steering. But at the same time, at the moment, I'm just playing these level by level, playing these composites and that sort of thing. So hopefully I got a little bit of information out of that, and I'll see you in the next one.